Well, good afternoon, ladies and gentlemen, and welcome to the annual general meeting of Yorkshire Building Society. I'd like to start this meeting by introducing myself and your board. I'm Ed Anderson, Chairman of the Society, and this will be my last meeting in this position, as I announced in November last year that I will step down as your Chairman at the end of this meeting. My colleagues who are here today are on my left, John Heaps, who joined the board in November 2014 as Chairman Designate and who will be my successor at the conclusion of this meeting, subject to approval of his election as a director in the member vote. Lynn Charlesworth, Vice Chairman and Chairman of the Group Risk Committee, and Guy Parsons, Chairman of the Remuneration Committee. And on my right, Chris Pilling, Chief Executive, Robin Churchhouse, Finance Director and Chief Operating Officer, and Philip Johnson, Chairman of the Audit Committee. I will introduce the rest of the board who are sitting on the front row, and I will ask them all to stand so that you can see who they are. We have non-executive directors, David Page, Kate Barker, Alison Hutchinson, and Mark Payne. We also have executive directors, Andy Caton, Chief Corporate Affairs and Treasury Officer, Ian Bullock, Chief Customer Officer, Mike Rainier, Chief Commercial Officer, and our Group Secretary, Anne Fitzpatrick. Thank you. This is a meeting of the Yorkshire Building Society, and I would like to thank you all for coming here today. We really do appreciate it when members are able to take time to join us. I should mention that some members' relatives or helpers may have also joined us this afternoon, together with, I believe there's a journalist from the Yorkshire Post here. I don't think we have a photographer this year. Now, these people who aren't members are not entitled to vote or to ask any questions at this meeting. However, I'm happy that in the interests of openness that they're welcome to join us. Can I assume that that is agreeable to everybody? Thank you. The notice of the meeting was sent to all members eligible to attend, and I propose that it be taken as read. Are there any objections to this? No, thank you. Ahead of the formal business set out in the notice, there will be 3 presentations. Chris Pilling will provide an outline of the Society's activity in 2014, together with an overview of our plans for the future. Robin Churchhouse will then look at the financial performance in the last year, and after that, Guy Parsons will give a summary of the Director's remuneration report. Finally, voting on the resolutions will take place. There will be every opportunity to ask questions after the presentations or on a one-to-one basis with our directors and our executive team after the meeting when refreshments will be served. Before I hand over to Chris, I would like to mention some highlights of our performance in 2014. And the way that the group is positioned for future success. I'm pleased to report that our 150th anniversary year was another successful year for the Society. We delivered a strong financial performance with solid capital and liquidity positions, robust levels of profit, and we continued to deliver long-term value to our members through our products and services. We have started 2015 confidently as we progress our strategic priorities and deliver on the investment programme that we started in 2013. Whilst the UK economy continued to strengthen throughout 2014, with house prices increasing on average by around 7.5%, more recently there have been signs of cooling in the housing and mortgage market. The relatively high level of household debt, very low inflation, and the weaker housing market mean that we do not expect the Bank of England to raise interest rates until the end of this year at the earliest, and possibly not until well into next year. In this environment, the Society is well placed to prosper and grow in strength and size as we continue to strike the balance between maintaining financial strength and providing excellent value and service to our members. I'm now going to hand over to Chris, and after the presentations, I will cover some board matters before we take members' questions. Chris.
Thank you, Ed, and good afternoon, everyone. I want to start by paying tribute to your chairman, Ed Anderson, who, as you've just heard, will retire from the board at the end of this meeting. Ed has guided the Society through a hugely significant time in its history and led the board as it successfully navigated some of the roughest waters the economy has ever endured. When Ed joined the board in 2003, we had 131 branches, employed 2,200 colleagues, had assets of £14 billion and 1.8 million customers, primarily in the north of the UK. Today, we have 100 more branches, double the number of colleagues. Our assets have increased 168% to over £37 billion, and we have 1.5 million more customers. On a personal level, Ed has always provided me with very wise counsel, and his experience and insight has been hugely beneficial to the Society. On behalf of everyone, thank you, Ed. So back to our business results. I'm delighted to report that we have delivered another very strong performance in 2014. We remained focused on the prudent and sustainable management of the Society and delivered record profitability whilst maintaining one of the strongest capital ratios of any UK financial services provider. We had almost 3,000 Best Buy mentions. On average, that is 57 Best Buys for every week of the year. We delivered record lending of £7.6 billion, helping people achieve financial security and the dream of home ownership. And our record mortgage growth of £2.6 billion means we provided 11% of the UK's total net lending in the year. We offered our lowest ever fixed rate mortgage, and we provided first-time buyers with one of the biggest ranges of 5% deposit mortgages, leading to 37% of all house purchase mortgages being to those taking up their first step on the property ladder. We also worked very hard to ensure our saving members had a range of competitive accounts at a time when savings rates were falling. We achieved an average savings rate that was more than 0.25% higher than the whole market, providing value for our members as best we could. We opened almost 200,000 new accounts. That's more than 540 for every day of the year. And when we did have to make rate changes, we focused on the loyalty of our existing members, ensuring many benefits from a higher rate than those offered to new customers. We also protected rates on regular saver and children's savings accounts, and at the same time, we increased the rates on our lowest paying accounts, benefiting almost 1 million of our members. It is this sustained strong financial performance that enabled your board to approve our investment programme, which is designed to deliver significant customer benefits. As part of this programme, we launched a consistent and contemporary new look, which, as you can see from the screen, unites our brands across the group. And we continue to invest in other significant benefits, like refurbishing our branches, with a further 51 branches being redeveloped this year, offering a more modern and pleasant environment to do business. We also further invested in our web and mobile services. Future activity will see more investment in our systems, all aimed at improving customer service. Our vision is to be the most trusted provider of financial services in the UK. which is underpinned by 5 strategic priorities, which are to deliver a leading people experience, deliver a market-leading customer experience, deliver sustainable financial security for our members, and deliver products and services that are simple and easy to use, and finally, to be locally famous in the communities that we serve. I will now update you on how we are progressing on each of these priorities, starting with people experience. Our performance in 2014 would not have been possible without the enthusiasm and hard work of our people, all 4,600 of them, who are passionate about providing outstanding customer service. I would like to take this opportunity to personally thank all of my colleagues for what they do for our customers and the society overall. It is, of course, essential that we attract and retain the best talent available. And in 2014, we grew our team by 264 people. We also continually invest in the development of our people, completing more than 11,000 training days for our colleagues for their development. We also helped our colleagues by delivering a modern new intranet with much easier access to information so we can better serve our customers. Our second strategic priority is about the customer experience. And during the year, the Society won 15 top industry awards. And we were particularly proud to be named the Best Building Society Mortgage Provider, the Best Building Society Savings Provider, First-Time Buyer's Mortgage Choice, and winner of the International Excellence Award for Charity Support. As well as many awards, 92% of our customers say that they trust us, resulting in us maintaining one of the best customer advocacy levels in the country. And the best measure for this is the Net Promoter Score. These independent surveys record the difference between those customers who would strongly recommend us and those who wouldn't. On this measure, we increased our score to 40%, well ahead of the industry average, which is just 3%. And if we look at where the Yorkshire brand is across all sectors, out of 265 national brands, we jumped 12 places to 38th position in the Customer Experience Excellence Survey, well ahead of famous businesses such as Costa Coffee, Tesco, and IKEA. But of course, we do not always get things right. So we keep a close eye on all complaints and how they are dealt with. A key measure derived from complaints is those referred by customers to the Financial Ombudsman Service, and how many of these the Ombudsman disagrees with our handling of the complaint. Throughout 2014, only 7% of our complaints were overturned by the Ombudsman, compared to an industry average of 57%. Whilst these are good results, we strive to be better. In 2014, 2 issues investigated by the Financial Conduct Authority came to a conclusion. The first related to a mortgage customers with payment difficulties, where the regulator imposed a £4.1 million penalty for our failure to promptly assess some customers' problems. Prior to the regulator's actions, we had voluntarily refunded all mortgage arrears administration fees charged since 2009, as we felt very strongly that this was the fairest approach for these customers. The second penalty of £1.4 million was due to promotional literature used for some structured deposit accounts falling short of the required standard. All affected customers have been given the option to exit their account with appropriate compensation. I'd like to sincerely apologise to the customers affected by these issues. And to ensure we do everything possible to prevent similar situations occurring in future, we have made considerable investment in transforming our systems, processes, and colleague training. Our third strategic priority is to deliver a sustainable financial performance and real financial security for our customers. I've already mentioned some of the highlights of our strong financial performance, and Robin will provide more detail in a moment. The fourth strategic priority is to ensure our products, processes, and systems are easy and simple to use. In 2014, we delivered a number of projects which helped make us fit for a fast-paced digital world. whilst retaining our commitment to face-to-face customer contact. Some highlights include enhancements to our web and mobile technology, including greater security for customers and improvements to our online processes, making it easier for customers to open new accounts and do business with us online. We also use technology to improve the service for our branch customers with the introduction of online appointment bookings and the ability to view and do some transactions on branch accounts online. And for our intermediary customers, we are also trialling web chat. These investments enable us to provide the best possible service, whichever channel a customer chooses, and helped us achieve a record number of people using mobile services and over 2.7 million online transactions last year. Our 150th anniversary celebrations provided a reminder of the most important role building societies have in local communities and how our contribution goes beyond providing great service and products. Our final strategic priority, therefore, focuses on being locally famous. Last year, we donated almost £2 million to charities and good causes, including £464,000 to more than 2,000 causes from our charitable foundation, raised largely by the 723,000 members who have joined our Small Change, Big Difference scheme. To ensure our donations support the charities that are important to our members, we ran a number of initiatives where around 60,000 people voted to select the beneficiaries. We also launched a new charity partnership with Marie Curie, setting ourselves an ambitious goal to raise £500,000 for this great cause by the end of 2016. I'm delighted to say we are already over halfway there, meaning we have provided enough funding for 12,500 hours of nursing care. Of course, time can be just as valuable as money, so we encourage all our people to share their skills and experience through volunteering activities in their local communities. I'm delighted that many of our colleagues took up this challenge, giving a record 10,000 volunteering hours on community projects last year. Protecting the environment also remains a priority. We made further substantial improvements to help reduce our waste and energy usage, including installing 1,400 solar panels at 2 of our main offices, recycling 100% of our paper, and encouraging hundreds of colleagues to car share and cycle to work. Being locally famous also means ensuring people know us. Awareness of the Yorkshire brand reached record levels following our sponsorship of the Tour de France Grand Départ, with 8 out of 10 people in Yorkshire recognising our new logo. Finally, I would like to take a few moments to look to the future. Our values, combined with our financial strength, mean we are well positioned to invest in the future with confidence, making a positive difference to the customers that we serve. Despite the slight cooling of the mortgage market, we expect to increase our overall mortgage lending, offering the benefits of our award-winning mortgages to more people, and further underpin our financial security. Whilst interest rates may increase in the future, until then, savings rates will unfortunately continue to be challenging. We will, however, work hard to ensure we continue to offer good long-term value products. I'm privileged to lead an organisation that's working to a different set of values which puts trust at the core of everything we do, as we strive to be the most trusted provider of financial services in the UK. Thank you. Let me hand over to Robin.
Thank you, Chris, and good afternoon, everyone. As you've just heard, in 2014, we reported a strong financial performance with record gross and net mortgage lending, record core operating profit, and a strong capital position. This has been achieved while continuing to focus on our vision to be the most trusted provider of financial services in the UK. Whilst focusing on this, we remain committed to maintaining our core financial strength and security, since it is this that not only ensures the safety of members' savings that they trust us to look after, but also ensures that we are able to continue to offer good value products and services in the future. In doing so, we remember always that we run the society for our members and not for the benefit of external stakeholders. We combine this financial strength and security with an understanding of what our customers need and want from us. We look to price our products so that they deliver long-term value, and whilst it is important that they generate some profit, since retained profit is our primary source of capital, we do not look to maximise profits. Instead, we aim to make no more than is necessary to maintain our financial strength and sustainability and to support our investment in the future of the business. Turning to the balance sheet, in 2014, the group reported gross mortgage lending up 13% to 7.6 billion, and net lending of 2.6 billion, representing 11% of the UK's entire net lending. This lending was all within our risk appetite, which is a board-approved set of limits on the amount of risk we are prepared to take on all our lending. This is critical to the future security of the group, since whilst arrears are relatively low in the current economic conditions, we must look to ensure that any future economic shocks do not threaten our financial strength. Our savings book grew modestly by 309 million. Within this side of the business, we have a difficult balance to maintain. We want to and do offer rates that are on average 0.25% higher than the market. But we must also make sure that our rates are not dramatically out of line with the market, since in doing so we would run the risk of being flooded by funding that we could not safely and sensibly lend to borrowers, and which would then sit on our balance sheet earning less than we pay to the savers. We are acutely aware of the impact of the current low-rate environment on savers, but cannot buck the market without damaging our financial stability. We can see from the chart on the screens what the markets think will happen to the official UK bank rate, but great levels of uncertainty remain as to both the extent and timing of any rate increases, and hence of when we can safely change our savings rates. We increased our liquid balances to 4.8 billion from 4.4 billion. This money is held to meet both day-to-day cash flow requirements and the cash demands that could result from a stress event, either for us individually or across the whole market. These liquidity levels remain comfortably above the regulatory requirements. Overall, we achieved sustainable growth of 3.1 billion, with total assets increasing to 37.6 billion. And we have maintained our focus on asset quality. The average index loan to value improved to 51%, and the number of loans in arrears by more than 3 months fell to 1.21% from 1.45% in the previous year, remaining below average industry levels. Finally, our capital position continued to strengthen. This is a critical measure of our financial strength since it reflects the money available to deal with unexpected losses. We ended the year with a core capital ratio of 13.8% and a leverage ratio of 4.8%. Both measures are among the very strongest in the UK, as the chart demonstrates, with the light blue bars showing the core capital ratios for a number of competitors and the dark blue bars the leverage ratio. Turning to the income statement, our profit figures remained healthy with a record 2014 core operating profit of 179 million, up from 152 million. We consider the core operating profit to be the clearer measure of our underlying performance, as it excludes items of a one-off nature or non-core items that reverse over time. These items can materially impact the pre-tax profit figure, either positively or negatively in any year. The pre-tax profit was down 6% at 188 million against 199 million in 2013. Both of these profit measures are high against historic levels, reflecting relatively high net interest income and low provisions levels. Looking at these and other key income and expense items, our net interest margin remained broadly stable at 1.52% compared to 1.56% the previous year. As I said, this is relatively high in historic terms, reflecting market conditions, including the availability of low-cost funding through the government's Funding for Lending scheme. And this chart shows how savings rates in the market across a range of products fell when the scheme was introduced and have remained low ever since. During that period of downward pressure, we have maintained a better than market position, as shown by the black line, which is our average rate, against the red line, which is the market. Income levels also reflect our more efficient management of liquidity, where we hold less on our balance sheet than historically, but by using other contingent sources of funding that we can call on if needed, have access to the same overall levels as in prior years. Turning to costs, these continue to run above normal levels as we progress through our investment programme and as we implement the high levels of regulatory change that have been introduced in recent years. The cost-income ratio increased slightly to 58.6%. During the year, 65 million was spent on our investment programme, of which 46 million was charged to the income statement. We remain convinced that these investments are in the best interest of the society and our members, that they will produce a positive financial return and other benefits for our members. We expect a similar level of spend in 2015 and 16 as we continue to invest in systems, people and products. Meanwhile, the cost of regulation continues to grow and in 2014 reached over £20 million out of our core costs of £285 million. This increased regulatory burden will continue. We have put in place a rigorous cost review and management programme that will control costs going forwards, ensuring we obtain value for money in everything that we do, whilst maintaining our strong focus on customer service. Our provisions charges remain stable at 46 million compared to 44 million in 2013. They include three main items. Firstly, the remediation costs following the finalisation of the FCA's action on structured deposits. The cost of this and of our earlier remediation relating to arrears administration fees, including the financial penalties, have been fully covered within our 2013 and 14 numbers. Secondly, our continued contribution to the Financial Services Compensation Scheme, which funds the wind down of a number of failed institutions. And finally, our core loan loss provisions remain steady at 20 million compared to 23 million in 2013, reflecting our focus on arrears management and strong house price movements. In summary, in 2014, we believe we have again balanced the provision of long-term value to our members with maintaining our financial sustainability. We maintained robust levels of capital and liquidity, delivered record profitability, and continued to invest in the future of the business for the benefit of the members. Thank you. I will now hand over to Guy.
Thank you, Robin, and good afternoon, everyone. The group's starting point when determining how we reward all colleagues is to ensure we're able, within the financial services market, to attract and retain the best talent for each role. We believe this approach enables us to deliver our vision, values, and objectives for the long-term benefit of customers. If the business as a whole and individuals in their own right meet those goals, it is fair that they are rewarded for their achievements. Now, how a business rewards its people is quite rightly one of the most scrutinised aspects of any organisation. As chairman of the group's remuneration committee, I can assure you that my fellow committee members and I appreciate the importance placed on our decisions. The Remuneration Committee is made up of 3 non-executive directors who have experience in this area. We also receive professional internal and independent external advice and monitor comparative remuneration levels within the financial sector. We are responsible for agreeing the overall remuneration policy from which the organisation determines individual levels of remuneration. This includes salary, variable pay, and other payments such as pension contributions relating to the Chief Executive and Executive Directors, Chief Officers, and other senior managers who have a material impact on the business. Non-executive director fees are determined by the group's Chief People Officer and Executive Directors and do not involve the Remuneration Committee. Non-executive directors do not receive any variable pay. It is important to highlight that no one is involved in deciding his or her own remuneration. The remuneration policy is voted on every 3 years and was approved by members at last year's AGM. So this year, you were voting on the remuneration outcomes themselves and not the policy we use to make our decisions. Your votes are cast on an advisory rather than binding basis, but we take your views very seriously and will consider the result carefully in making our final decision. The approach taken to base salary for the executive directors is the same one that is used for all colleagues within the group. Dependent on the group and individual performance, colleagues received a pay award of between 0% and 5.3% on May the 1st, 2014. Base salary for the chief executive increased by 4.3% and other executive directors by an average of 3.03%. Non-executive director fees increased by 2.8% in line with the general pay award for colleagues. Regarding variable pay, as you have seen from the earlier presentation, the group enjoyed a successful year in 2014 when measured against the key financial, risk and service indicators. We therefore propose to award variable payments to the executive directors of between 11.9% and 44.5%. These amounts reflect executive directors' achievements against the variable pay criteria of profit before tax, costs, customer service and personal objectives. We then overlay an assessment of our risk performance over the period, making an adjustment if it is considered appropriate. Between 50% and 60% of these payments will be subject to a period of deferral of between 2 to 3 years. Where total remuneration exceeds £500,000 per year, half the variable pay will be delivered as a share equivalent instrument in line with Prudential Regulatory Authority Code. Overall, for context, I've included this slide, which shows the level of chief executive total pay at similar sized financial organisations. The grey bars show the total asset size of each bank or building society, with the red bars showing the level of total remuneration paid to the respective chief executive. Taking this into consideration, we do not believe that our levels of remuneration are excessive in comparison to the wider competitive financial services market in which the group operates. We have also heard in today's presentations about the regulatory issues that affected the group in 2014, and these have had an impact on reward levels. Variable pay for 2014 has in part been calculated on profit and cost measures that reflect the financial penalties imposed by the regulator, as well as the cost of remediating affected customers. In addition, the enforcement action relating to the promotional literature for some structured deposit accounts has resulted in reductions of between 5 and 10% of the total 2011 variable pay for some executive directors and senior managers. This will be applied to the final deferred element of the 2011 allocation due to be paid in 2015. Looking ahead, it is proposed that the review process for executive directors' remuneration will remain the same in 2015, mirroring salary increases given to all colleagues during the annual pay review, and that the maximum executive director variable pay will also remain unchanged at no more than 50%. We believe our report underlines the principle that I highlighted at the beginning of my presentation, that our remuneration helps us to attract and retain the best talent available for each role in a competitive financial services market, and is a fair reward for the performance achieved in 2014. Thank you, ladies and gentlemen. I will now hand back to Ed.
Well, thank you, Chris, Robin, and Guy, for your presentations. On behalf of the board, I would like to echo Chris's words of thanks to our senior management team and to all our people for their ongoing commitment, loyalty, and hard work. It is their focus on providing excellent service to our members and customers across all of our brands that has enabled the society to move forward so successfully. I would also like to thank Chris for his very kind words about my leadership of the board. It is the role of your board to lead the society on your behalf to ensure it maintains long-term success. The board's priorities are to set the society's strategy and monitor progress against it, to oversee the financial strength and sustainability of the society, to ensure robust controls, processes, and risk management practices are in place, to monitor the performance of the executive team, and to ensure that member views are sought and considered. The directors collectively provide the combination of skills and experience necessary to meet these objectives. And I would like to thank my fellow non-executive directors who have worked extremely hard and diligently throughout the year. During the year, there have been 3 board appointments. Mike Rainier has been appointed to the role of Chief Commercial Officer and Executive Director. Joining us in June 2014, Mike has responsibility for leading the commercial activities of the group, including product development and customer experience. Our remaining 2 appointments were to non-executive roles. Firstly, as I've mentioned, John Heaps joined the board in November 2014 as Chairman Designate, and he will become my successor at the end of this meeting. John is the former chairman of corporate law firm Eversheds, where he was ultimately responsible for the firm's compliance with the legal sector's regulatory regime, and he contributed significantly to the development of the firm's long-term strategy. Our second new non-executive director, Alison Hutchinson, was appointed to the board in February this year. Alison brings significant IT expertise and change management skills and is a member of the board's audit committee. I'm delighted that the Society has been able to attract individuals of such caliber and experience, and all 3 are due for election by members at this meeting. Further board changes include Simon Turner, who retired as a non-executive director from the board at the end of the 2014 annual general meeting. Simon had joined us in 2005, and he was the chairman of the Remuneration Committee. Also, Philip Johnson, who has been a non-executive director since 2007, will retire at the conclusion of this meeting. Philip's in-depth knowledge of the financial services industry and his role as chairman of the Audit Committee have been of great value to the board. Mark Payne will replace Philip as chairman of the Audit Committee. I would like to record our thanks and appreciation to both Simon and Philip and wish them well for the future. The final board change is, as I've already mentioned, my own retirement at the conclusion of this meeting. Before we turn to the notice of the meeting, I'm going to ask my successor, John Heaps, to just introduce himself and say a few words.
Good afternoon, everybody. First of all, I'd like to add my personal thanks and appreciation to Ed, both for his outstanding chairmanship and also for the time and the care and the thought that he has given to ensuring that I'm in good shape to take over this important role. I'm extremely proud to have been chosen as the next chairman of such a well-respected and successful mutual organisation. In recent years, Yorkshire Building Society has grown to become a nationally important financial organisation led with great expertise by Chris and his team. It is, as you have heard, in excellent shape to meet the challenges of the future. If I may, I'd like to tell you a little about myself. I was born and brought up in Yorkshire. My Yorkshire roots are deep, and my home has always been here, even when my work took me further afield. Some of you in the room may recall our family business, Heaps Tours. The business began after the First World War with a vehicle that carried coal to Ferrybridge Power Station, and at the weekend my granny would scrub it out and it became a charabanc to take people off to Bridlington and Filey. I'm a lawyer by training, and my career has been with Eversheds. I was chairman from 2010 until last year. Eversheds bears strong similarities with Yorkshire Building Society. It is highly regulated and also has strong customer focus. I am confident that the skills and the experience that I have acquired will equip me well for my new role. I'd finally like to say that I strongly believe in the mutual concept and the core values of this society. I am very pleased indeed to be involved in an organisation that has as its driving purpose the provision of a safe place for savings and supporting people into home ownership. Aspects of our lives which are so crucial to our sense of security and well-being. It will be a privilege to be your chairman. Thank you.
Thank you, John. We now turn to the notice of the meeting and the resolutions that you're being asked to vote on. In addition to the election of Mike, John and Alison, as I've just mentioned, you are also asked to re-elect the remaining 9 directors: Kate Barker, Ian Bullock, Andy Caton, Lynn Charlesworth, Robin Churchhouse, David Page, Mark Payne, Guy Parsons and Chris Pilling. Whilst under the Society's rules, directors require re-election every 3 years, in accordance with best practice, we've agreed to ask members to vote on the re-election of each director on an annual basis. Directors' re-elections are reviewed by the board without the relevant director being present, and we are recommending the appointment or reappointment of all our directors. The special resolution set out in the voting papers is to change the Society's memorandum to remove the prohibition on it giving a floating charge. This prohibition was contained in the Building Societies Act, which was removed by Parliament last month. The proposed change will bring the memorandum up to date. The ability to offer a floating charge will assist in our Treasury activities and could help reduce funding costs, and it allows us the flexibility to operate on a level playing field with the banks. The other resolutions relate to the 2014 report and accounts, the reappointment of the Society's auditors. Deloitte were appointed to this role in 2009, following a competitive tender process, and as the Society's Audit Committee and the board are happy with the service that they deliver, we are recommending their reappointment. And finally, the approval of the Directors' Remuneration Report. I would like to record our thanks to you and all our members for your continued support and loyalty to the Society. As you have heard, your board and the executive team will endeavour to continue to deliver the strategic priorities, providing you with a trusted, safe and secure home for all your financial needs, backed up with the highest possible standards of service and good long-term value.